it is just absolutely too late for this to like be fixed. It's going to be bad, and the people that aren't prepared are going to really get hurt. People that are prepared are actually going to do well, but it's going to be a different world afterwards. I started when I was writing my first book, Guide to Investing in Gold and Silver. This was back in 2005, 6, and 7. And back in like early 2006 or late 2005, I'm trying to write about the world monetary systems, and I'm a big believer in cycles. For instance, there's a generational cycle. Dan, my producer, sent me a meme one time that hard times create strong men. Strong men create good times. Good times create weak men. Weak men create hard times. It's a cycle. And it had, the people that grew up in the Great Depression, those were the people that were steeled by it and they were the strong men that came out of bad times. And they created the good times that then created the weak men. And now we've got all these people like, this modern monetary theory stuff and all of the socialism that you're seeing, this sentiment toward socialism that's creeping up in the United States. This is so dangerous. And socialism only creates misery and death. And there isn't any example you can point to. Recently, I think it was the former prime minister or something of Sweden came out and had to correct people and say, Sweden is not a socialist country. We're a capitalist country with some social programs that ride on the back of capitalism. And that is the way all prosperity comes from, people just wanting to deal with one another. And whenever government gets in the way and overtaxes or overregulates, creates all of these burdens, and that's what socialism does. It's very scary, this cycle of weak men creating hard times. And that is what we're headed toward. And with this next crisis, I'm really worried about us, the U.S., becoming a much more socialistic society.
Yeah, it's going to be very interesting how it all plays out. And I think you brought up that essentially what's going to happen during this next crisis is the central banks are just going to print a lot more money, even more than they did in 2008, probably 10 times more, in my opinion. And they've actually already... Yeah,
take a certain percentage increase. And they've taken the currency, so the base currency used to be 0.8 trillion, and now it's 3-something trillion. And so they had to add 400% to the currency supply last time. So if you add 400% to 3-point-something trillion, you're talking about creating as much currency as the whole M2 currency supply. At that point, I would think that confidence would be lost. I'm sorry I interrupted you.
Oh, no problem. Yeah, and no, I agree. And it looks like they've already basically begun. I just saw an article today on Zero Hedge. The title is Federal Reserve Proposes a New Rule to Let Inflation Run Hot Ahead of Next Recession. And we've already seen basically QE start up again now. You talked about the repo market, which we actually we haven't seen since 2008. So we're heading into this crisis, and they're already basically starting to inflate. They're lowering interest rates. We're already seeing negative interest rates in Europe. So and we've seen even central bankers, I think it was Mervyn King, the ex-Bank of England governor, came out and said this is going to be a Armageddon. There's no way out from this one. In the past, they had some room to do things, especially if you go back to the 1970s, where there had been some backing to the dollar with gold until 1971. Then they went into a very inflationary period, and but the amount of total
percentage of GDP was that was a low point back in the 70s, and now we're over 105%. And if you include unfunded liabilities, it's astronomical. There's no way to dig out of this hole. Sorry.
Yeah, no problem. But that was going to be my point. Was there was only a few hundred billion in U.S. government debt back in the 1970s. Now there's 23 trillion, and back when Barack Obama was the president, it was only 8 trillion. So it's tripled in the last 11 years. This is so far beyond gone at this point. And as you pointed out, they just have to print. If they're going to print out of this next crisis, which everyone's talking about, that's what they're going to do, and they've already said they're starting already. As you pointed out, because of the percentage, it's going to have to be tens of trillions of dollars this time. And essentially, it looks like we're going to be headed towards a hyperinflation. That's what it looks like. And as you know, as basically a monetary historian, a person who's looked into this, written books on it, you've looked into places like Zimbabwe or Venezuela or the Weimar Republic. It is not a fun time to be in a hyperinflation.
Yeah, I don't think you're going to. I've toured the Monetary Museum at the New York Fed, the Bank of England, the Japan, Australia, China, and there's a couple of others. And this kind of stuff repeats over and over again. It's predictable. There isn't any way out of this. And like you said, what I see coming. The people that are going to benefit the most are people that are in precious metals, and some of the correct cryptos. Cryptos are in a very early stage of evolving still, and we've seen Bitcoin, for instance, fracture into a whole bunch of different Bitcoins. This is one of the things. It's supposed to be limited to 21 million, but